kind of the total financial universe, somewhere north of 500 trillion. And so at 6 trillion, Bitcoin's a little over 1% of global wealth. And, obviously if someone bought it and held from the beginning, they'd be quite wealthy. One thing we tend to see through these cycles is that during major bull markets,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses the crypto and Bitcoin, according to Lyn Alden. If you increase the price to several $100s per coin, let's say the equivalent of today's dollars, you'll be looking at a market capitalization that is quite substantial. There have been trillions, several trillions, invested in assets. Take a look at the significant growth of big tech in recent times. Over the course of a decade or 15 years, there has been a notable level of growth observed when considering an additional factor. When you combine a number of trillion-dollar companies, the total value can add up rapidly. Generating trillions of dollars in revenue, a select few prominent tech companies have achieved remarkable success. This staggering figure can be described as follows. The individuals who owned those assets undoubtedly experienced significant financial gains compared to those who did not possess similar resources. Considering the inclusion of tech in their portfolio or investments in foreign stock markets, it seems likely that there has been a noticeable shift towards individuals who are expected to experience significant wealth growth, particularly those who own assets. However, that's in the context of a world that has over $500 trillion in wealth, right? So let's take a closer look at Bitcoin. Currently, the value stands at around 1 trillion, with a slight increase to 50,000. If it were to reach 300,000, the total value would skyrocket to $6 trillion, and lots of things Lyn Alden discussed, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
right. So if you go up to several $100,000 per coin, say an equivalent of today's dollars, you're looking at a market cap it's in the many trillions, several trillions for the asset. And if you look at, for example, the rise of big tech over the past decade or 15 years, that's a similar level of growth you've seen if you add a bunch of those kind of trillion or $2 trillion or $3 trillion companies together. You can quickly get to high single-digit trillions just from a handful of those big tech companies. And so you could phrase it as the people that owned those certainly gained wealth compared to people that, for example, did not have tech in their portfolio or that were invested in other countries' stock markets. So I do think, yeah, there would be a shift from people that there'd be a greater wealth appreciation, obviously, in people that own the asset versus don't. But that's in the context of a world that has over $500 trillion in kind of wealth, right? So yeah, and so for example, it used to be Credit Suisse, now it's UBS. That division does a global wealth report, so they kind of look and see how much wealth is out there, and estimates range from 500 trillion to a quadrillion, so 1,000 trillion dollars of wealth when you include real estate, bonds, things like that. Now, obviously, we can get into a discussion about whether or not that's real wealth. Like how could that translate into ecological realities? But basically, that's the kind of the total financial universe, somewhere north of 500 trillion. And so at 6 trillion, Bitcoin's a little over 1% of global wealth. And obviously, if someone bought it and held from the beginning, they'd be quite wealthy. One thing we tend to see through these cycles is that during major bull markets, you tend to see people that have been holding coins for a number of years sell their coins into that strength. If you bought Bitcoin at $5 and it goes up to $50, a lot of people sell a lot of their position because they say, well, now I can buy a house. Or if they bought it at $100 and it goes up to $10,000, they sell out of it, or at least some of the positions.
I bought it at $70 and sold it at $50.
Yeah, and that happens to a lot of people. They either buy high and then trim out of it when they think it's not going well, or they have the good problem. They say, "Oh, this thing tripled," and then they get out and and so the percentage of people that have generally held just for nonstop for 10, 15 years has actually been fairly small.
According to Lyn Alden, with 6 trillion in Bitcoin, it accounts for just a little over 1% of the global market. It's clear that if someone purchased and held onto it from the start, they would have accumulated significant wealth. One thing to note is, what Lyn have noticed is that during significant bull markets, you have a tendency to see through these cycles. It's interesting to observe individuals who have held onto their coins for several years now, deciding to sell them during this period of strength. It makes you wonder, purchase Bitcoin at $5 and it has surged to $50. Many individuals frequently sell a significant portion of their possessions. Many individuals are drawn to this role due to the potential financial gains. For instance, some may see it as an opportunity to purchase a house or make a significant profit by selling an asset that has increased in value. Lyn Alden decided to purchase some positions at $70 and later sold them at $50. It's unfortunate that such fluctuations occur in the market. Many individuals tend to purchase assets at high prices and then sell them off when they perceive a decline in performance. Others, on the other hand, face the fortunate dilemma of having to decide what to do with their successful investments. This thing tripled, and then they exited, and the percentage of people who generally have the amount held exclusively and non-stop for the past 10-15 years has been relatively modest. Let's back to the Lyn Alden interview.
So according to the most of the data we have, for example, if you look at Chainalysis, and there's some controversy there because they're the firm that also is law enforcement. When law enforcement wants to track things on chain, they'll go to Chainalysis, for example. But their data, they kind of estimate where's crypto being used, or what types of crypto assets are being used and for what purpose. Out of the top 20 countries on their crypto adoption index, 16 of those are developing countries. Now, the caveat is that's generally on a relative basis. So, for example, a greater percentage of Nigerians, use Bitcoin by most estimates than, for example, Americans, right? But because there's so much wealth in America that the actual that the absolute dollar amounts is still higher in wealthy countries. And then among developing countries, it's very heterogeneous. So, for example, Nigeria is a kind of a hot spot where there's quite a bit of usage, whereas Egypt is a cold spot. There's not a lot of even stablecoin usage. You'll see a lot of people, they want physical dollars on the gray market, the black market. You don't see a lot of stablecoin usage. You don't see a lot of Bitcoin usage. Part of it is they actually in Egypt is kind of technically illegal to have it. That's an old ruling. It's not really enforced significantly, but that's not really the underlying reason. It's more just for whatever reason, it's not really spread there in a way that it has spread in Argentina, Nigeria, El Salvador. There are certain hotspots where it has. And so you have that pretty significant heterogeneous mix. And China used to be kind of at the forefront of Bitcoin. They had 70% or so of the mining was happening in China, and that was in large part because, one, they have access to cheap electronics and all kind of the that's where they manufactured a lot of the chips. That's where they made a lot of the rigs. They could easily get repairs. It was a very good environment for that. But two, because they built so much unused hydroelectric capacity, during the wet season they'd have basically free electricity. And then during the dry season, they'd use coal. And so that was a really significant part of the network for a long time. And by extension, to have a good amount of the holders there as well. When China banned Bitcoin mining in 2021, they had previously banned it multiple times. They didn't really stick. If you ban Google or Twitter, you only have to do it once. But Bitcoin, they had to kind of keep banning and keep kind of trying. They eventually it stuck a little bit. And so you had about half the network leave China, go elsewhere. It's still the second or third biggest mining jurisdiction, but you kind of had that diffusion of some of the machines and then some of the wealth to other parts of the world. So it's kind of been this rotating center of where Bitcoin has the most critical mass. That's a lot of what I do. Yeah, I basically start with news consumption, and also not just news, but just contacts. There's certain types of activities on social media, other types of activities on kind of traditional journalism, other types of contacts in various industries to kind of see what's happening, and then there's just independent research, check what's going on. For the macro environment, it's obviously I'm very reliant on public data that's available. Whereas, for example, in the Bitcoin space, I'm active in the venture side, and so I talk to what founders, what developers are doing, what capital allocators are doing, what institutions are doing. So that tends to be more kind of a mix of public available information and then just kind of collecting information from what I know is happening in the industry. And the other factors, I tend to work in parallel. So instead of working on one thing that I could get stuck on for a period of time, maybe it's interesting, maybe it's not, I tend to have 3 or 4 articles or subjects that I'm kind of advancing on, and whatever kind of grabs me that day, I'll advance that and kind of make progress on that. And then eventually, if I'm stuck on something else, eventually something will hit me and I'll kind of get unstuck on that thing I've been working on in parallel. So that kind of parallel effort for having always kind of 3 or 4 topics that I'm trying to advance on seems to be kind of an optimal point for productivity on my end.
Based on the available data, it is worth noting that there is some controversy surrounding chain analysis. The firm also functions as a law enforcement tool. When authorities need to track activities on the blockchain, they often turn to companies like Chainalysis, for instance. However, they analyze the data to estimate the usage and applications of cryptocurrencies. Crypto assets are being utilized, and for what purpose? Out of the top 20 countries on their crypto adoption index, approximately 16 of those countries are still in the process of development. However, it is important to note that this is a general observation. On a relative basis, it's worth noting that a higher percentage of Nigerians are inclined towards using Bitcoin. Most estimates, for instance, are for Americans. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.